In the last class we explained about current liability, and in that section we explained about short-term borrowings, trade payable, other current liability. In other current liability, I have already explained current maturities of long-term debt, interest accrued but not due. These 2 points explained in the last class. Now comes interest accrued and due on borrowings. Interest accrued and due. It is payable, like in 11th class you studied about outstanding interest. Interest may be on debenture or may be on loan. It is due but it is not paid on the date of balance sheet. Next one is income received in advance. Any income received by the company. For example, sometimes customers may give money in advance before purchase. Before purchase, customers may give money to the company, or company may receive money from the customers before sale. So that is what is called income received in advance. Then unpaid dividend or unclaimed dividend. The company may declare dividend, and if it is not claimed by the shareholders, that amount also will come as current liability under other current liability. Then comes calls in advance. Calls in advance means the advance calls paid by the shareholders. Earlier class I told about the money received by the company may be application money, allotment money, first call money, second call money, like that. If any of the shareholder paid, for example, with the allotment money, if any of the shareholder pays the first call and the second call together with allotment money, even though these not two were not called by the company, this first call and second call were not called by the company, even though the shareholder paid if these two calls in advance, then that is what is called calls in advance. Then any other payable, any other type of payable, and that is to be clearly shown under notes to account. So these are the things coming under other current liability. So what you have to learn is, you have to learn these things, and also earlier class I told what is the main heading and the subheading. The current liability here in this is main heading, and the subheading are the short-term borrowings and the trade payables, other current liability. For example, unclaimed dividend givens. Unclaimed dividend comes, then you have to say that the main heading is current liability and the subheading is other current liability. So that the unclaimed dividend will come under main heading current liability and the subheading under current liability. Like that, you have to learn it. So this way, we completed that liability side, equities and liabilities. The things were in equities and liabilities. In that first part, we studied about shareholders fund, and the last one comes current liability, not share but current liability. Already we studied about the different categories of the liabilities. Now we are going to see what are the things coming under assets in the second part. Under the first part, share equities and liabilities, we have seen one, shareholders fund, second one, application money pending allotment, third one, non-current liability, fourth one, current liability. Now comes the second part, assets. Under assets, the first one is fixed assets. Under fixed assets, there are different other categories like a tangible asset, intangible asset, work in progress, intangible assets under development. In the assets part, the first one is fixed asset, and these categories are coming here. And what are the categories? What are these tangible assets? What are intangible assets and work in progress and intangible assets under development? We are going to see one by one. First of all, tangible assets. Under fixed assets, the first category, as I told you, tangible assets. In 11th also we studied about they have a physical existence that can be touched and seen, like land and building. In 11th also case same comes land and building, machinery, furniture and fixture, computer, vehicles, office equipment, etc. These are some of the examples which I am giving for you for the time being. If it is given, then you have to say main heading is fixed asset. If it is given computer, then you have to say it is under fixed asset and subheading tangible asset, which can be touched and seen. Simple part over here. Then comes intangible assets. Under this fixed asset, second category is intangible assets. They do not have physical existence. Tangible assets have physical existence, like that land and building, plant and machinery, furniture and fixture, etc. They can be touched and seen, they have physical existence. But intangible assets, opposite side. That is, they do not have any physical existence. That cannot be touched and seen. For example, is goodwill. We studied about in 11th about goodwill, about what it is. Trademark, computer software, any particular software made for particular purpose by any company. That computer software, mining rights, the right for mining, like petroleum, etc. called copyrights for books, patents for some particular items, medicines, etc. Services and operating rights. If any operating right or any service right is acquired, that is also coming under intangible asset. Formulas, particular formulas made, licenses and franchisee. These are the different items coming under intangible assets. Another category and C is capital work in progress. Work in progress means under construction. If a building is under construction, then it will come under capital work in progress. Next is intangible assets. Those intangible assets under development, not completed, under development. Like a patent, like this coronavirus now, it's a vaccine. Now it's going on, it is not completed, it is under development. And the patents or the copyrights of that one, it is not completed. That type of items are coming under intangible assets under development. These are the items coming under fixed assets under assets. After fixed asset coming non-current investment, then comes deferred tax asset. Opposite of deferred tax liability under that first section liability side. That is the difference between accounting income and taxable income. There, if accounting income was more, then the tax on that difference is called deferred tax liability. But here it is, if the taxable income is more than the accounting, then the tax on that one is called deferred tax asset. Then comes long-term loans and advances. This you should not confuse with. If it is this all come in loans and advance, when you hear it, you may think that it is liability. No, this is here. It is given by the company in the form of capital advances, security deposit, or other loans. For example, capital advances means the money given by the company to third party for the purchase of assets. Security deposit means the given by the company for security purpose. Other loans and advances, any other type of loans and advances which are not coming under this capital advance or security deposit, like that of advance given to employees. If any money, for their necessity, if any money is advanced by the company to its employees or to the suppliers, that will come under other loans and advances. That should be specifically explained under notes to account. So these are the categories coming under fixed assets. Other non-current assets. All these current and non-current, as I explained earlier, that will be calculated as within 12 months or after 12 months, or within operating cycle or after operating cycle. Here if it is all long term, so it will be after 12 months or after accounting operating cycle, whichever is more. Here it becomes other non-current assets. The assets in the form of trade receivable, long-term trade receivable, like debtors, bill receivable, etc. Trade receivable. If it is receivable after 12 months or accounting operating cycle, then it is long-term trade receivables. Once more remember, bill receivable, debtors, or any other type of non-current asset, like the unamortized expense or losses. Unamortized means not written off. Some expenses and losses have to be written off. Deferred expenses that will be written off year after year, like that of discount on issue of debenture, loss on issue of debenture, etc. are these examples of these losses and expenses, and which is unamortized, not written off, remaining. Then insurance claim receivable on the property. If any amount is receivable, that is also coming under these other non-current assets. And all its explanation, as I told you again and again, it should be specified, specifically shown under notes to account. Now current assets, fixed assets, current assets, and these current assets are coming under the category within 12 months or within operating cycle, whichever is less, like current investment, non-current investment, current investment. If it is more than 12 months or that accounting operating cycle, it is coming under non-current, and if it is within 12 months, then it is current investment. All that examples, the same thing. The investment in equity shares, preference shares, debentures, bond, or in property, etc. are coming under current investment. And inventories. Inventories are stock, unsold stock. The stock which is remaining unsold. Trade receivable, like that bill receivable, debtors, which is receivable within 12 months or within operating cycle, whichever is less. Cash and cash equivalents. Cash and cash equivalents means the cash remaining or the cash remaining with bank or any other equivalent to cash. Short-term loans and advances. Any loans and advances given to employees or given to suppliers within this 12-month or operating cycle or any other type of current asset. So these are coming under current assets. So study these things. Then again I am telling you have to study about that main heading and subheading. It can be asked, mention any 4 items coming under current assets, or mention any 4 items coming under fixed assets, or it can come any 2 items or 3 items coming in intangible assets, like that. So all these things you have to learn. Then you can easily write what is the main heading and what is subheading and what are the different categories coming under these different subheading. Okay.